What's going on, growth chasers? It's the Dividend Bloodhound here, back with another investing episode. Today's episode, I'm talking to you about Tattooed Chef stock and exactly why I keep buying more of this company and why I am super bullish on Tattooed Chef stock. Absolutely fantastic company, has had a couple of really good days, and in the next couple of weeks or so we have some catalyst events on the way that should help spike the share price. If that sounds like something you're interested in, stick around after the intro, smash that like button and consider subscribing to my channel as well, and I will see you on the flip side. Hey again guys, welcome into the video. Tattooed Chef stock, one of my most bullish companies and acquisitions of shares, one of my biggest positions, and first and foremost, the first catalyst coming along the pipeline here is Analyst Day, which is taking place at 10 AM Eastern Pacific time over in the United States on the 15th of December, and it will be airing here live at about 6 o'clock local GMT time, and you can tune in through the link on the Tattooed Chef website and listen to the webcast that's going on. This will get even more coverage for Tattooed Chef. It has done no marketing so far whatsoever. It's all through word of mouth. I can't even speak. Word of mouth, both in terms of its product and investing. But I think as more analysts jump on board, we're going to see extra coverage and the word of mouth spreading as investors climb into and see just the exceptional fundamentals that this company has. And I, for one, are super excited to see just what price targets analysts come up with. At the moment, we only have the one at sighting at $26, and then actually a second one that came in at a hold at $18. But I'm excited to see just what other analysts think and see basically where the foundations are for this company. And then from there, we're only going to build upwards. Just when I thought the good news couldn't get any better, this week Tattooed Chef announced through SEC filing that they're bringing two new products to the market: plant-based pepperoni and plant-based sausage beyond meat substitutes that are coming to the market in a direct assault and a direct threat to Beyond Meat and in direct competition with that company. A lot smaller for now, but this just shows the future intent from Tattooed Chef. Just this announcement actually encouraged a few percent, a couple of percentage points up in the Tattooed Chef stock price, actually watching it when this was announced, which is absolutely outstanding. It's just two extra products to an already getting busy product line, and it just shows exactly where Tattooed Chef sees itself, not only being plant-based products but going after market share that would typically belong to Beyond Meat. Recent interviews with Roth Capital and then reading articles on Yahoo Finance have only made me even more bullish on this company, and that Kerrisdale report from backed by Kramer has just become a bit of a laughing stock really. It did what it was designed to do. It was a simple hit job. It tumbled the share price down a couple of dollars, and a lot of institutions use this as an ideal time to buy in, but that is exactly all it was. The report has been largely proved to be baseless, and most savvy investors just used it as a lower price point to either buy in, or they used it to average down their positions. The Yahoo Finance article, which I will link in the description below, pointed out a few key things, and one of them was that the share price is just a huge discount when compared to Beyond Meat and Vital Farms that are also operating in the sector, but its actual income and its revenue streams and its EBITDA is actually not too far off what these companies are actually at. So it just proves that the price is at a discount, and it hasn't quite been found out about yet. So now is an ideal time to get in while the company is relatively unknown and still under $20 a share, because you can bet your bottom dollar as soon as it becomes widely known, that share price is going to fly. 67% growth year on year in sales from 2018 through to 2021 is likely to be achieved, and or most likely is to actually be beaten. And then it's also going to be expanding its margins and its EBITDA in line with that as well. Tattooed Chef has a thing, Sam Galletti has a thing about always keeping Tattooed Chef profitable, and that is a really, really honourable good cause and makes really good business sense in my book. The company is going to be expanding, it's not shy of doing so, but keeping it sensible and expanding properly without getting into ridiculous debt to do so is a better, more stable bet in my humble opinion. As already mentioned in previous videos, distribution for this company is about to go metastatic. It's getting its products into even more Walmarts, Costco's and Targets all across the country. Online sales have been opened and anybody across the United States can now buy, and that hasn't even been factored in to the revenue and growth estimates. So essentially any revenue from that is going to be added on top of what's already been forecast, which is a really good position to be in. Another key person to look into for Tattooed Chef, yes, we have Sam Galletti, the CEO, who has a really great business head on him by the look of it, but Sarah Galletti, whose brainchild this company was, is extremely creative, and that is going to be a unique selling point of this company, a USP, where she is being so innovative with the products that they are bringing to the market. They are head and shoulders clear of the competition in just how good the food looks, how good the food tastes, and the branding. And we have to remember that that's all without a single penny being spent on marketing. The Instagram feed, the Twitter feed, the Facebook pages, all of it has been done without spending a penny, just word of mouth. So we can imagine what's going to happen when they get a marketing budget in place next year. Now this is the absolute kicker for me. I know I'm super bullish on this company and I'm probably going to bore you guys to death with it, to be fair, but Tattooed Chef has minimal debt. It has very little debt at the moment and has got to where it is profitably and sustainably. It hasn't taken out huge great big loans to do so. In fact, quite on the contrary, it's got very little debt, and the de-SPACing process actually gave it $82 million to spend debt-free on expansion. And as already looked at in interviews with Roth, is that they are going to spend this carefully, sensibly, on marketing the company but not getting into debt for it, and then expanding capacity at its factories to allow it to cope with the expanded demand expected from a sustained marketing campaign. While we are talking about expansion, Tattooed Chef has expanded its capacity for production at both its Italian and Californian factories by 50% this year already, and then it's going to have to do even more so over the coming quarters and years to keep up with this, and maybe even open new facilities further down the line to cope with the demand that's 100% going to come for these products. Profit margins have been increasing year on year by a few percentage points, and future forecasting shows that this is going to be in the high teens over the coming quarters. That's absolutely excellent news as well, which will mean Tattooed Chef can leverage its branding to charge more and make more profit on its products, which means, you guessed it, better revenue, better profits, and probably a higher share price as well. And finally, one last point that sort of has gone under the radar but has been mentioned by Sam Galletti is the potential of a takeover bid or a merger with another company. So another similarly priced company that it could easily merge with, or it could just be acquisitioned outright by an even larger company such as General Mills. Now if this happens, that's only going to send the share price rocketing as people try to get in to take advantage of that situation. And then obviously eventually shareholders at that point will probably be bought out, but you'll have made some serious money in the process, especially if you're buying in at around the $15 to $20 mark. I still view this company as heavily undervalued at the $20 mark, and I'd even go so far to say that as it increases in price to $25, I will still probably be buying at that point. I'm trying to keep it in line with my portfolio because I don't want my portfolio to just be everything tattooed chef over half and then everything else squashed into the corner. I want to try and keep that diversity, but I'm so confident in this company. It's very hard not to just keep chucking money into and buying more shares of this company when they are at the absolute discount that they are at now. As I've said, I'm holding for the long term. I'm essentially and have been a bag holder for this company both before the SPAC and after the de-SPACing, and I've ridden it up to when it was nearly $30 and ridden it down when it got all the way down to 14 or 15, and all throughout that process I have been buying all the way, and I continue to do so and don't have any plans to stop as long as I can continue to do so within my portfolio diversity. This video has been an absolute pleasure to bring to you. I always love talking about companies and stocks that I love. This is one of them. If you could appreciate that by hitting that like button, sharing this video down Tattooed Chef investing pages or whatever, that would be absolutely fantastic. And even consider subscribing to my channel as well. Hopefully I will see you in the next one. Catch you there.